Hello students, I am Rahul Sharad Joshi, Assistant Professor at the Bhopal School of Social Sciences. I would be taking lectures on income tax, and the topic for today is income from business or profession. This is the third head of income. Now before we start, let's understand what business means. Business means any trade, commerce or manufacture or any adventure or concern in nature of trade, commerce or manufacture. Normally, business means any recurring economic activity, but from income tax point of view, even an isolated activity can be termed as business depending upon the facts and circumstances of each case. Then, what do you mean by the word profession? Profession includes vocation. Now, profession requires purely intellectual or manual skill on the basis of some special learning or qualification which is gathered through past training or experience, such as chartered accountants, company secretaries, doctors, lawyers, etc. Now, what do we mean by the word vocation? Vocation implies a natural ability of a person to do a particular work like singing, dancing, etc. Now, there is a difference between vocation and hobby. Vocation has a earning feature, whereas hobby may or may not have a earning feature. Now, what are the general points? The first general point is income includes negative income. That is, income includes loss also. Point number 2 would be there is no concept of notional profit. Now, what do we mean by the word notional profit? For example, if an proprietor withdraws good costing rupees 10,000 for personal use at an agreed value of 12,000, that 2,000 will be termed as notional profit because a person cannot do a business with himself. Number 3 would be there is no scope for anticipated profit or loss. Whatever is going to happen in future, we don't consider it, whether it is for profit or loss. Next is legality of business. From income tax point of view, there is no difference between a legal business and an illegal business. Even if income is earned through illegal business, it is put to tax. Next would be compilation of income from all businesses. For example, if an assessee is having more than one business, then income from all the business is merged together and it is put to tax. And the last one would be that the business or profession should continue in the relevant previous year. It is not necessary that business should be in existence for the entire year, but yes, it should be in existence for some part of the previous year. Now we have done with general points. Now we will be talking about certain incomes which although are related to business but are not taxable under this particular head. The first one would be rent from property will be taxable under the head income from house property even if the assessee is engaged in business of letting the house property on rent or if such property is held as stock in trade. Second would be income from dividend. Again, income from dividend would be taxable under the head income from other sources even if the assessee deals in shares or even if the shares are held as stock in trade. And the third one would be winning from lotteries or crossword puzzles and races, etc. They will be also taxable under the head income from other sources even if such income is derived through regular business activity. Now we would be coming the pro forma of how to calculate income from business. Simple pro forma, let's take it. How do we go about it? The starting point would be net profit as per profit and loss account. Add disallowed expenses and losses which are debited to profit and loss account. We also add deemed income which are not recorded in books of accounts. Then out of this we deduct allowed expenses and losses which are not debited to P&L account, and also we deduct income not related to business but credited to profit and loss account. Now we will talk about each one of these points in details. The starting point will be your net profit as per profit and loss account. Then we add disallowed expenses which are debited to P&L account. Now what do we mean by the word disallowed expenses? Disallowed expenses are those expenses which are not related to business but they are debited to P&L account, because of which what happens, your net profit shows a reduced figure. Now we need to correct it, hence we need to add back that amount. In the same way, the income which should be credited to P&L account but which is not credited, again the same impact is on profit and loss account. This profit is again showing a less figure, so we again add that income, and then we less two things. Number one is those expenses normally which should have been debited to profit and loss account but which are not debited. So now the impact on profit would be, the profit would be showing a higher figure and we need to deduct those expenses. In the same way, there are certain incomes which are not related to this particular head but they are credited to profit and loss account, because of which again your net profit shows a higher figure and we need to reduce those amounts. Now after adding and subtraction, the figure which comes is the real amount of net profit. Now I would be taking up a small example to make these particular points very clear. The example we have taken is, now I have taken a profit and loss account. Now let's go through this profit and loss account. Let's go through it. Number one, to office salary 22,000, to general expenses 5,500, to household expenses 6,700, then gifts to relatives 8,000, postage and telegram 2,500, repairs 1,800, donation to Prime Minister's National Relief Fund 11,000, net profit comes to 38,000. Now on the credit side, the gross profit 65,000, dividend amount is 3,000, capital gains 16,000, rent from house property 8,000, and by discount is 3,500. There is other information. Other information says depreciation allowed rupees 2,000 which is not recorded in books of accounts, and commission received rupees 3,500 which is not recorded in books of accounts. So now we will calculate the correct amount of net profit with the pro forma which we have used. Now let's start with the solution. The starting point would be net profit as per profit and loss account, which is rupees 38,000. Add disallowed expenses. Now what are the disallowed expenses? Those expenses which are not related to business but which are debited to P&L account. So let's go to the debit side of our question. The first is to office salary. Office salary is an expenditure related to business. It should have been debited. We have debited it, so nothing doing about it. Second is general expenses. Now, in case of general expenses, the question doesn't give us any information about general expenses. So, we will consider it for business purpose and hence it is allowable. It should have been debited. It is debited. We will leave it alone. Third is to household expenses. Now, household expenses is a personal expense. It is not related to business. So, it shouldn't have been debited to profit and loss account. So, we will add this number 1. So, add disallowed expenses, point number 1, household expenses 6,700. Then next point, gifts to relatives. Even gifts to relatives is not a business expenditure, it's a personal expenditure. So again we will add it up. So gifts to relatives 8,000. Then postage and telegram related to business, ignore it. Repairs, again we have taken it as related to business, ignore it. Then donation to Prime Minister's National Relief Fund. Again, donation is not a business expenditure. Again, we will add it up. So now we have 3 items under disallowed expenses. Which are those 3 items? Number 1, gifts to relatives. Number 2 is household expenses. And number 3 is donation. Then what does the second point in the format says? Deemed income which are not recorded in profit and loss account. So let's see our other information for that. Point number 2 in the other information says commission received rupees 3,500 which is not recorded in books of accounts. So this 3,500 is not included in the profit and loss account which we have prepared. So because of non-inclusion, my net profit is showing a lesser figure. So even I need to add it up. So add this amount, commission received rupees 3,500. Now let's come to the less figures. Now what is the first point under that? Those expenses which are related to profit and loss account but which are not debited. In that case, let's see the first other information which says depreciation allowed rupees 2,000 but which is not recorded in books of accounts. Now, is depreciation a business expenditure? Yes, it's a business expenditure. So it should find its place in the debit side of profit and loss account but which is not there. Hence, I need to reduce it. So reduce depreciation 2,000. Now, the last point under the format is, so those incomes which are not a part of this particular head but which are credited in profit and loss account, we even need to deduct those income. So for that, let's see the credit side. The first one is gross profit, right? It came from your trading account. Second is dividend income. Now, dividend income is taxable under the head income from other sources. It is not a business profession income, so we will reduce this amount. Second is capital gain income. Again, this income is taxable under the head income from capital gains. Even we will reduce this amount. Then the third is income from rent, which is again taxable under the head income from house property. It is again not taxable under this particular head. Then it is discount. So discount is received in business. So that is basically a business income. We won't touch it. So there are three incomes which are not taxable under this particular head, but they are taxable under their respective heads. Hence, we will reduce these three incomes. So we will reduce dividend 3,000 rupees, capital gains 16,000 rupees, and rent from house property 8,000 rupees. So now, after this inclusion and exclusion, we arrive at the correct amount of net profit, which comes to rupees 38,200. So this is the correct amount of net profit. I hope this basics is clear to you, and this is all from my side in this particular topic. Thank you.